So let's go ahead and continue this, man. Onward with this. Where was I? We looked everywhere for potential deals. No aviation company was too small or too remote for our consideration. For our consideration, we even found an opportunity in Canada. We were re- we were retained in 1968. I mean, I'm pretty sure I know what I mean, but hold up. Continue to have something, keep possession of, not abolish, discard, or alter. In 1968 by Transair, a Canadian regional carrier based in, I'm not even going to attempt it, y'all. Hold up. What is it? Winnipeg. Okay. In Winnipeg, whose business was built on milk runs, regularly scheduled flights with several stops up to the Arctic. Places such as Yellowknife, Flin Flon, Wool Cave, hold up, man. Hold up. These are some unique names right here. Uh, shit, we got to let's just look it up. Okay, so apparently, but it's like a beach resort. Hold up. Excluded in a mother. I fuck with it though. I fuck with it. Oh, okay, this. You get the idea. Okay. Whale Cove. Okay. In is this what I think it is? Repulse. Repulse Bay. Whale Cove in Repulse Bay. And cargo work for military outposts throughout the Northwest Territories. We wound up advising Transair on aircraft purchases, financing alternatives, and plans for general expansion. We even advised its board with management strategies and selection. Back in New York, one of the areas Bob and I wanted to move into was aircraft leasing. Computer leasing companies were doing enormously well at the time, and unless your head was bruised in the sand, you could see that the concept of leasing had exciting applications in other areas, such as aviation leasing companies essentially relied on the residual value of assets for most of their return. Just for those who don't know, remaining after the greater part or quantity has gone. The only trouble with computer leasing, as we saw it, was that the equipment was often obsolete long before the lease term had ended. With aircraft, we believed the residual asset values would be more predictable, more substantial, and spread over a far longer term. This was particularly the case with the new short haul aircraft that Boeing, with its 737 and McDonnell Donalds, McDonnell Douglas, McDonnell Donalds, with its DC-9 had developed aircraft that we thought would have a long life. In February 1969, we watched with keen interest as a small insurance company, later called Integrated Resources, held a public offering before logging even a minute of operating history. It was plain from the prospectus. I'm saying it right, right? Prospectus. Okay, okay. Prospectus that there was no business behind the company, and yet there they were, going public with nothing to offer investors beyond a potential sound idea in the modest track record of its principals and related ventures. Bob and I decided that if it was good enough for integrated resources, it was good enough for us. And we immediately hatched a plan for public offering of our own. In May 1969, we filed an S1 form and an 8-page prospectus with the Securities and Exchange Commission SEC for an aircraft leasing company called Jet Capital Corporation. The offering was handled by my old friend Ken Wyke. Saying this right? Wick, who was still with Toby and Kirk. Because we had no operating history behind us, major underwriting houses such as Goldman Sachs and Merrill Lynch would not have given us an appointment. Hold up, it's the first time I'm hearing this term. Underwriting houses? Underwriting houses refer to the process used by lenders and insurers to evaluate risk before approving loans or policies. In real estate underwriting, assesses the credit worthiness of a borrower and the value of the property being purchased. And you're just doing this for companies on a larger scale. And Merrill Lynch would not have given us an appointment. But for Ken and his partners, who had never done an underwriting prior to our association, we were a risk worth taking. Besides, there was tremendous upside in it for the underwriter. Public offerings could be very profitable, and we had a sound business concept. Over the years, I had frequently done business with old friends, people with whom I've enjoyed a certain history and trust. All things being equal, it can make sense to go with someone you know. And in this instance, it was very important to give our speculative offering every advantage. With Ken and the modest resources of Toby and Kirk, I thought we could have a successful offering without the backing of one of the big underwriting firms. For our purposes, Ken's firm was plenty big. Yo, the way that is worded. Bob and I provided Jet's original risk money of around 100,000, which real quick, bro, 100,000. Oh, so in 1999? No, bro, 1969. Wow, almost a million, bro. That was almost a million, bro. Gee, around 100,000, which we had slowly accumulated at the firm, and we also cut Rob and Andy in on the stock just prior to our filing, we sold another $250,000 worth of stock to a small number of friends at around 25% of the anticipated offering price. In our public offering, we expected to sell around 400,000 shares in warrants at $10 per unit. How much is? Let's see here. Let's see here. Let's do some snooping. Would be worth today. You could use a historical stock calculator. Nah. Okay, let's see. Worth today. How much? 400,000 shares of stock worth $196,900 in 1969 are worth today. Damn, inflation adjustment $400,000 in 1969 is equivalent to. But that's what I'm saying. Is that the value of the stock historical investment amount? Let's just say if somebody had that amount of shares in a stock, they ran up a bag. That's over 3 million in today's dollars. It's great per unit. But the market had worked against us during the long delay between our filing and our offering in January 1970. Airline stocks were particularly weak during that period. Ultimately, we sold 150,000 shares in warrants. A document issued by a legal or government official authorizing the police. Okay. Not that type of warrant. Hold up. Warrant and yeah, stock markets. Stock warrants are financial instruments that give investors the right to buy a company stock at a predetermined price within a specific time frame, offering potential for high returns but also carrying significant risk. Ooh, so it's sort of just similar to buying the stock. Raising about $1.5 million, and we knew we were lucky to get the deal done at all within weeks. The Dow Jones Industrial Average dropped nearly 5%, and our jet shares tumbled sharply. The constant fluctuation in the stock price gave me something new to worry about, and it took a tip from my Harvard classmate. Do you mean? And I took a tip from my Harvard classmate Jim Clark, an architect and investor, and one of our outside directors at Jet, to settle me down. Jim persuaded me to quit fretting about the day-to-day movements in our stock price and instead concentrate on building the company. That advice trading period helped me weather my difficult trading periods in the years to come. Almost immediately, we looked to put our new investment capital to work. Our $1.5 million was a tremendous amount of money for a couple of young airline advisors, but it just wasn't going to provide equity in a whole lot of airplanes, even in 1970 dollars. All right, look, we're gonna go ahead and continue this another time. Y'all stay tuned though.